When it comes to looking at the stock market or the economy, one of the go-to guys that all of us investors look at is Warren Buffett. He owns the world's biggest investing firm, Berkshire Hathaway, and he's outperformed the stock market by a long way. Now, recently, he held his annual shareholder meeting, where he gives his thoughts on the stock market, the economy, and on the stocks that he's buying and selling. But the unique thing about this shareholder meeting was that Warren Buffett revealed that he has not bought any stocks in 2020. In fact, Berkshire Hathaway, his investing firm, has been a net seller of stocks. And obviously one of those big group of stocks that Buffett sold was all of his airline companies. Delta, American Airlines, Southwest, and United Airlines entirely sold, which clearly came as a big surprise to most investors. But what I want to talk about in this video is first I want to go through the stocks that he's selling at Berkshire Hathaway. But more importantly, I want to go over the underlying reasons why Buffett has not bought any stocks and in fact is a net seller. Very important video, this one. So let's start by showing you Warren Buffett's biggest stock sale, obviously apart from his airline stocks. And I'm surprised no one's really talking about this. He sold off most of his position in the bank Goldman Sachs. He previously owned 12 million shares in the company and he sold over 10 million of those shares. That's 84% of his holdings. Buffett said that if economic difficulties become severe enough, even strong banks can be under a lot of stress, and we'll be very glad we've got the Federal Reserve System standing behind them, end quote. So I don't exactly know how to read into this, but let's just say I personally would not want to be a Goldman Sachs shareholder at this point in time. But Goldman was not the only bank that Buffett sold. Also 3% of Berkshire's JP Morgan was let go of as well. Now this is nowhere near close to 84% like Goldman Sachs, but still it's something to think about. Another stock on the sale list was SiriusXM, the broadcasting company. Berkshire sold almost 4 million shares in them. Other big names on the selling list for Berkshire were Amazon, the e-commerce company, General Motors, the vehicle company, and Phillips 66, the energy company, was 100% sold as well. And yes, there were more companies sold by Berkshire Hathaway, but we don't have the time to go over them all. The big question on everyone's lips, however, is why? Why has Buffett sold so many stocks and purchased nothing? There's a couple of fundamental reasons, and I want to get into them now. The first thing you need to realize is it's not like Warren Buffett doesn't have any cash so that he cannot buy any stocks. No, he's actually got $137 billion of cash on the sideline, waiting to be deployed. And Buffett said himself, he wants to deploy quite a bit of this. He said, and I quote, "We are willing to do something very big." I mean, you could come to me on Monday morning with something that involved 30 or 40 or $50 billion. And if we really like what we are seeing, we would do it. But at the moment, we haven't seen anything attractive. And that's the first key reason why Buffett is not buying any stocks, because he can't find anything attractive to buy at the current stock prices. I mean, here's what Buffett said last year about stock prices. He said, "In the years ahead, we hope to move much of our excess liquidity, excess cash, into businesses that Berkshire will permanently own. The immediate prospects for that, however, are not good. Prices are sky high for businesses possessing decent long-term prospects." You know, Buffett, he just can't see any deals that he's willing to buy, and a lot of other value investors, like myself, are sitting in the same boat. But you know, it is quite interesting for those who have gone back and read all of Buffett's shareholder letters throughout time. Some of you may have noticed the similarities between what Buffett was saying today and what he was saying back in 1987. In his 1987 shareholder letter, Buffett said, "At Berkshire, we have found little to do in stocks during the past few years. We currently find no equities that come close to meeting our tests. At the year in 1987, we had no major common stock investments other than those we consider permanent or arbitrage holdings. It's very alike back then in 1987 to what he's saying today. And some of my maybe older viewers will remember what happened in the stock market back then. Let's just say it was not fun for investors. It basically went down sharp and took about 3 to 4 years to recover. But let's move on. The other, well, let me be honest, quite scary reason is that Buffett just seems very doubtful on where the market is heading in the short term. For those who have watched his annual shareholder meeting, I'm not sure if you guys picked up on this, but Buffett was a lot more careful with his words and his advice on investing, especially when talking about the short term. He was very unwilling to speak about the stock market over the next couple of years. Instead, he said, it's okay to invest, but you need to be investing for the long term. He said, invest like as if you own a farm. Buy, hold it for 20 to 30 years, and don't even bother looking at the price. I personally agree with this way of investing, but on the other hand, it does make me think about what might potentially happen in the stock market over the short to medium term, over the next 3 years. I've never heard Buffett be so apprehensive in the way he speaks. The third reason that I want to talk about behind Buffett's non-buying is the uncertainty around consumer spending and profits for companies. And it's something that a lot of you might not understand if you don't know about valuing stocks. You see, obviously, us value investors, we look to buy a stock at a price below its intrinsic value. In order to determine the intrinsic value, we need to know the cash flow and the profits. But the problem is that in 2020, it is extremely hard to know what companies will be earning, how much people are going to be spending this year and the years to come. Uncertainty is a business's worst nightmare, and it's impacting us investors as well. You know, Mark Cuban, the billionaire, the Mavericks owner, he said the same thing. He said, I think it's almost impossible to predict where consumer and corporate demand is going to come from. And because of that, it's hard to create a valuation for businesses. He then went further along and told CNBC he was surprised at how stocks have recovered so far. He said, I think people are naturally optimistic right now in terms of the market. I just don't think they are really factoring in what we are going to see on the other side. Now, the last reason I want to talk about is the Fed, and let's just say the very interesting moves that they've been making. Since we saw this crisis in March, the Federal Reserve has pledged to pump more than $4 trillion into the financial system. They have cut interest rates, they have relaxed banking rules, and have increased their lending by a bucket's load. Now, you see, a recession is obviously a bad thing, but one of the good things about a recession is the bad companies, the ones who don't manage their finances well and have poor business models, they go out of business. You can think of it as a nice rain washing away the weeds. Except these bad companies, they don't go out of business when you throw money at them. The Fed have pledged up to $750 billion in working with big companies on loan and bond offerings. They have also pledged a further up to $600 billion for lending to small and medium-sized businesses. And yeah, of course the Fed needs to step in to a certain extent to provide certainty in the market, but over $4 trillion in the financial system, that's a lot of money. At the end of the day, we're just in one of the weirdest times when it comes to the stock market, when it comes to investing. There's so much uncertainty and so many unusual underlying factors going on. But at the end of the day, we always need to focus on what we can do. As investors, Our portfolio must be bulletproof. Make sure we're owning those companies with strong business models, strong balance sheets. Make sure we've got proper hedges like gold in our portfolio. And of course, an adequate amount of cash like Warren Buffett for safety measures as well. We can't control the outside market conditions, but we can control our investment decisions. Now let's focus on those and let's make sure we are prepared adequately.